Like major checkpoints in this guide, I'm going to stick in some quick recaps to make sure we're all on the same page. I don't require you to take notes or anything, so I hope this allows you to kind of check in with yourself if you understand and are ready for the next part of the guide. So to recap what we learned so far, our goal is to invest in the stock market. We want to invest in the stock market in comparison to real estate or physical gold because it's way simpler to set up and maintain, has historically provided good returns, and we can even build a system to make it automatic using just our phone. I'll show you how to do that in the rest of the guide. We want to reduce the risk of investing in the stock market and reduce the chances of losing money, so we're going to do two things. First, we're going to use a buy and hold strategy instead of a trading strategy. We can never predict whether a stock will go up or down in price in the near future perfectly. Sometimes we might be correct, but sometimes we won't. And instead of trying to predict the market, we would just buy stocks and hold on to them for a very, very long time. Throughout the history of the stock market, if you bought into the S&P 500 and held on to your investments for long enough, you wouldn't have lost money. Now, this directly connects to the second part of our strategy, which is to invest in index funds. Picking stocks and investing in individual stocks is actually very risky. We never know how stock will perform long term, and I've made this mistake before and lost a lot of money trying to be smart and investing in individual stocks. So to overcome that, we will diversify through index funds, also known as indexes. The index that we will be investing into is the S&P 500.